Welcome folks to another video from Blue Sky Trading, where we try to make sense of the market for you. If you haven't done so already, please check out our earlier video where we talk about the overall market conditions and analysis of which sectors have been holding up the best so far. In this video, we look at some specific stocks and possible entry points. Again, if you enjoy these videos, please hit that like button and subscribe to our channel.
All right, well, jumping right into it, let's start with some solar stocks. So I'll bring up the TAN ETF first. So we reviewed this ETF in the previous video, but now let's take a look at it in some more detail. I think in this case, you'd be okay trading the ETF directly if you don't want to pick any individual stocks. In the previous video, we looked at the weekly trend. Now let's zoom in a bit and look at the daily chart. So you can see the W bottoming pattern that TAN made back from February to June of this year, and then from there broke out to the upside. Also, during that same time, you can see how many times the 200-day moving average was resistance. So there's 1, 2, 3, 4 times that it hit that 200-day moving average before finally breaking out in July. Since then, this is the first time that it's been back down to the 200-day to back test it, this time from the top side. I would think as long as this holds a support, we could see a nice move in this ETF. An aggressive entry would be to buy it now in anticipation of the 200-day holding. Your stop could then be just below Friday's low, around 72.40. A safer entry would be to wait for confirmation of the next move up. So in other words, taking out the recent highs. You would still have to set your stop at around the same level. So doing this would increase the amount that you're risking, but it would make the trade more likely to work. So it's always a trade-off between the two. Do you want the lower risk entry or the higher probability trade? Looking at some individual stocks in the sector, one that I really like is ENPH. I do have a small starter position in this one, as it's right near its support level. Zoom in here a little bit. So you can see it's been consolidating sideways for a while now, bouncing right off that support. I think you could add to or even start a position if this were to move above the 21 EMA. So if you set an alert somewhere here around 294 and you get a move above that 21 EMA with volume, so make sure you have that confirmation with a high volume move, and then put a stop right below the support. It's trading pretty wide, so make sure you adjust your position size accordingly based on how much you're willing to risk. It would be about an 8% risk if you bought it right above the 21 EMA and put your stop right below the current support.
Another one to look at is FSLR. This has had the strongest move so far in this sector, consolidating at highs. Look for a break above 140 on high volume. That's important, make sure that high volume's there. Another way to trade it is if it continues to move sideways and it gets closer to the 50-day moving average, then take a starter position with a stop right below.
All right, let's take a look at some oil and gas stocks. So here again, you could look at trading the XLE, but in this case, I think there's some better choices by picking stocks instead of trading the ETF. So let's start with Devon Energy, DVN. On this one, I would watch for a move above Friday's high. So you want to see it break this resistance level right here. It's been making higher lows, so as long as that pattern continues, it could turn out to be a good trade. You'd want to set a stop right below Friday's low on this one. Another one to look at is EOG Resources. It's a very similar pattern, actually almost identical pattern. So here again, you could buy it on a move above Friday's high, so you'd want to be looking at it somewhere around the, I guess just below 114 level. And again, you'd want to put your stop below Friday's low. Third stock in this sector worth looking at is FLNG. So they're a shipping company. They transport LNG worldwide. They're in a short-term channel that's trending down. So to buy this one, we would be looking for a move breaking above the downward sloping trend line. So right around that, say 33.20 or so level. And then for this one, you'd want to put your stop, depending on how tight you want to put it, I'd say probably below Friday's low, somewhere around the $31 level. Or if you want to give it a little more room, you could go as far as the middle of this channel, down to around 30, 35 as your stop. And the final one in this sector, bring up Marathon Petroleum, MPC. So this chart actually looks really good. It's right at resistance now. You can see it's been resistance back here. It was resistance here on September 12th. And now it's bumping up right up against it again. So I'd say a move above 101.40 would be a good place to take a position in this one. You'd want to have your stop right below the 50-day moving average. So let's say somewhere around 95.70 or so.
And the third sector we'll look at is metals and mining. For this one, we'll look at AMR first. Still in a sideways consolidation, held at the 200-day moving average. I think you could take a position on a push above the 50-day moving average on volume, or if you're really aggressive, on a break on Friday's high. A good stop would be around the 130 level. 129, 130 level. Next up, we'll take a look at BTU. This was one of the stocks we recommended in last week's video on the breakout of the trend line. This trade is still doing really well. If you took this idea, I would start moving some stops up or maybe putting some staggered stops to make sure that this doesn't turn into a loss. We're currently around 7%, and in this market, you don't want a profit to turn into a loss. And the third stock in this sector, NUE, not a very clean pattern, but it was up on Friday when the market printed new lows. This hasn't gone back to its June low. The idea is if the market bounces, stocks like this should bounce harder.
Yeah, that's a good one. I actually do have a very small starter position that I got in last week on this one. You could look at adding or starting a position on a move above Friday's high and the 8 EMA if it's with good volume, and ideally I would only do it if it closes above the 8 EMA. It's an aggressive trade, so I'd keep the size pretty small and a stop around the 102.50 level. Actually, I'll bring up the hourly chart. On the hourly chart, it actually looks better than the daily chart for a short-term move. It's moved above all its moving averages on the hourly chart, and you can tell that it's starting to curl upwards. So it bottomed out back here at 102.86. Been trading sideways in this channel, and now it seems to be holding above this 21 EMA and hopefully starting to push the Bollinger Bands up. If we go back to the daily chart, if this does break above Friday's high and you were to take this trade, I think the next reasonable resistance level for this one would be around 117, so right around that 21 EMA. One other stock I would mention in this sector is VALE. Now, this one, it's a very volatile one, so this trade is not for everybody. If we zoom out a bit, you can see that this one really makes huge moves in both directions. When you look at this pattern, this could potentially be a topping pattern, but for now, when we zoom into this section here, it is just trading in the sideways range. I would be watching this one for a break to the upside on volume. So basically, if we draw this trading box, so that's the range that it's trading in right now. I would be watching this one to see if it can break out of this box, so above that, let's say $14 level, and if it can do it on volume. You'd want to trade this one small because, like I said, it's very volatile, so it can pull back hard. If you did buy it on a breakout, realistically, you'd have to put your stop at least just below that 21 EMA, so around 1283. With your stop there, you'd be looking at an approximately almost 8% risk if you were to buy the breakout, if you bought it right as it's breaking out. So you want to adjust your position size accordingly. Again, like I mentioned, this trade isn't for everyone. It's a pretty aggressive trade, but I think something worth watching for a potential big move up. Just one other stock I wanted to mention that I noticed last week. This one actually isn't in any of the sectors that we mentioned, but I just happened to notice it, and that's WWE, or the World Wrestling Entertainment. So this one, if you zoom out, you can actually see it's been trading in this really nice channel for quite some time, and it's right near the bottom of the channel now. So it actually seems like a pretty good entry. The better entry probably would have been a couple days ago, or early to middle of last week when it broke out from this downward sloping trend line. But I don't think it's too late to get in on this one. As long as it continues moving, I'd probably set an alert somewhere around the 70 level. And if it continues moving, I think you can take a position there. Your stop would have to be right below this trend line, so somewhere around $67. And basically you'd be watching for this one to move up to that top trend line as your resistance level. So that's all we got for today. Hopefully this video was helpful. If you enjoyed the content, please click the like and subscribe buttons. Again, just make sure you're properly managing risk in this market. We went over quite a few stocks today in this video. If for some reason all these alerts were to hit on Monday, don't just jump into all these trades. Maybe try a couple. Make sure you're managing your position size in each trade, managing your risk to protect your capital until we get into a better market environment. And it will get better eventually. Thank you, and we'll see you next time.